Hello everybody, what's going on? So a big news just dropped from SOFI Technologies. Institutional filling record revealed that banking giant Deutsche Bank AG bought a brand new stake in SOFI Technologies. According to the SEC filling, Deutsche Bank accumulated 2.5 million shares of SOFI stock valued at approximately 44.64 millions. Now, when a global financial powerhouse like Deutsche Bank deploys over 44 million to build a fresh position in a digital first competitor, you have to stop and ask why now? What does Wall Street see unfolding here? Today, we are going to dive deep into what this institutional buy means, dissect SOFI explosive growth metrics, analyze recent analyst upgrades from major firms like Piper Sandler, and evaluate why the broader structural shift in the fintech and interest rates could propel SOFI significantly higher from here. Let's break down this 44 million buy from Deutsche Bank first. Institutional investors don't make moves of this size on whim. They do it after exhaustive fundamental analysis, stress testing loan portfolios, and scrutinizing the revenue durability. With this buy, Deutsche Bank now controls roughly 0.19% of SOFI total outstanding shares. Overall institutional ownership in SOFI currently sits at 38%. Over the past few quarters, we have seen a steady stream of institutional capital accumulating shares, from smaller boutique wealth managers steadily ramping up positions by hundreds of percent to major global institutions stepping into the arena. Now, you might see the recent legal disclosure showing routine insider sales, for example, executive transactions like CTO Jeremy Rischel or EVP Kelly liquidating small percentage of their holding. But if you read the actual SEC filing, these sales were executed under pre-arranged rules 10b trading plans specifically to cover tax without holding obligations associated with vesting equity award. It is standard executive comprehension mechanics. Insiders still hold millions of shares and own over 2.5% of their entire company, keeping the financial incentive aligned directly with long term shareholders. So, to understand why institutions are buying, look directly at SOFI's operational performance. The fundamental story behind SOFI right now is pure operational execution. In its most recent quarterly earning report, SoFi delivered blowout number across the board. Revenue 1.21 billion for the quarter, surging 42.5% year over year. Earning per share came in at 0.12, beating expectations of zero point 0.1. This compares to just 0.08 per share in the same period last year. Third loan origination hit a record-shattering 14.8 billions, demonstrating immense consumer demand for their lending platform despite broader economic pressure. So what makes these results impressive is SoFi's net margin profile, which currently sits at nearly 15% alongside a return on equity exceeding 6%. Management has set full year EPS guidance around 0.60 per share, while consensus Wall Street estimates are trending even higher at 0.61%. SoFi is no longer just an unproven hypergrowth fintech burning cash to gain market share. It is a highly profile, fully licensed digital bank generating substantial top line revenue growth while expanding profits margin. Wall Street is taking notice of these fundamentals and adjusting price target accordingly. Piper Sandler recently initiated coverage on SoFi with a bold rating and a $20 price target. Their bullish stance centers around SoFi consecutive earning beats, expanding profitability, and an exceptionally attractive valuation following the stock's consolidation earlier this year. And they aren't the only one raising targets. Goldman Sachs bumped their target price up from $17 to $21. Truist Finance pushed their target up to $19. The current consensus Wall Street price target sits at 22.42, with some analysts projecting upside target as high as 32.73, representing significant upside potential from recent trading levels around 18.91. In the options market, bullish momentum is picking up as well. Heavy call option activity recently spiked to 523,000 contracts purchased in a single day, roughly 36% above typical daily volume. Traders in both the option market and institutional trading desks are positioning for a strong upward continuation. Behind SOFI's internal metrics lies three powerful macroeconomic tailwinds that could fuel the next leg of growth. First, digital asset momentum. The broader crypto environment has seen renewed institutional inflow supported by momentum around regulatory progress like proposed Clarity Act. As a retail platform that integrates investing, cash management, and crypto linked offering, SoFi stands to benefit directly as a retail trading volume and active user across digital platforms. Second important thing, interest rate dynamics and loan margins. As monetary policy shifts and rate cut cycle normalize, SoFi cost of capital drops because SoFi operates as bank holding company funded primarily by user deposits. Lowering funding costs allow them to widen net interest margins while expanding refinancing volume for the student loan and personal mortgages. Third, and the most important thing, the all in one finance super app mode. Legacy brick and mortar bank carry massive real estate overhead, while pure legacy fintechs lack bank character and rely on high partner bank fee. SoFi occupies the sweet spot, a digital first low overhead platform with a full banking charter. Every new credit card, checking account, or investment account user feeds directly into their low cost deposit base, creating a powerful flywheel effect. When you assemble all the puzzle pieces, the structural advantage, the financial metrics, and the institutional accumulation, the big picture for SoFi becomes very clear. Deutsche Bank didn't just place a 44.6 million bet on stock ticker. They allocated capital to a company delivering 42% revenue growth. Record setting loan organizations risking earnings. They allocated capital into a company delivering 42% revenue growth. Record setting loan organizations rising earning guidance and expanding profit margins, with major Wall Street firm assigning price target up to $22 and beyond, option volume heavily leaning call side, and global institutions accumulating millions of shares. SoFi demonstrating that its business model is built for sustainable long-term market leadership. For investors looking for digital banking revolution, SoFi Technologies stand out as one of the most compelling fundamental growth plays in the entire market today. The smart money is taking notice, and the growth story is just getting started. So prepare now. With that said, thank you so much for being here. See you in next one.